Hey, it's Soleil, and this is episode 188 of the Orange Pill Investor. And today I'm going to talk about some weird option activity. I mean, it's normal, but it just looks weird. So I was watching MicroStrategy price, as I sometimes do, especially after some nut shrivel from the last week. And, when you are margined to the gills and 80% of your account is in MicroStrategy, and then it crashes. Oh, I don't know if it was 50%, but it was a damn lot. And so, got a nice little bit of a buffer um, in my margin buying power, but I was kind of watching the price, and I had a limit order set for around 1400, and I had it set for what was the at the money premium yesterday, which was about 7,000. It is not going to hit that, and even if it does hit 7,000, it would be probably because it's now $40 in the money. And that's the reason, is because about 15-20% of that options value has decayed since yesterday because of theta, which is like eight bucks a day. Now theta will accelerate big time on Friday. So this could be 8 today, tomorrow, and Thursday. That's 24 bucks. And there's like another 2,400 left in this. And all of that would have to evaporate between Thursday and Friday. But the reason I had left 100 shares uncovered, and I thought, okay, well, if the price pumps a bit, maybe I'll jump in there and sell a covered call. And I'm even getting antsy as I'm talking because MicroStrategy was at 13.95. Should have been the perfect time to snatch this at the money covered call. But I wanted to illustrate, so the price is up, and so that means the option prices should be up. And this option price is up 50%. So I could sell this 1400 strike right now for 50% more than I could have yesterday at the same time. And you would think that would be the case for all of these options. However, you can see that this price change is going down. The increase in price is going down. And even though MicroStrategy is up like $100 today, once we get up here into the 1550s and above, these are all still down. So if you think, oh, well, I'll just go in here and sell any strike because the price of MicroStrategy is up, and I'll sell any strike for more than I did yesterday, that's not going to be the case. And the reason is because even though theta was like $8 a day down there at the money, and it's only losing $4 a day here, look at the whole option price. The option price was worth like $10 yesterday. So $4 drains out of it. That's 40%. So this little bit of, and so delta is 50%, is 0.5 at the money. But way up here, delta is 0.1. So the $100 that MicroStrategy's gone up is only going to increase this price by $10. And then it's lost all of this to theta. And those figures aren't going to be exact because as the price moves up and down, delta is changing. So yesterday, delta might have been 0.08, and now it's 0.1. The implied volatility can be changing for each of the options. And even Vega was a 0.22. And at the money's 0.5. Yeah, so even the rate at which these options are affected by implied volatility are changing. So don't just think, oh, okay, MicroStrategies, and see, I could have sold this covered call when MicroStrategy was at 13.95, and now it's down to 13.84 again. But still, that's $10. Yeah, I'm only lost maybe $100 on that from yapping my gums. But yeah, so that's the explanation, is why you can look at an option if it's way out of the money, even though MicroStrategy is up $100 from yesterday to today, it doesn't necessarily mean that this is going to be up. Now, it's going to be down a lot less than it would have been if MicroStrategy was still at 1300. This damn thing would be worth, well, maybe half of this. Delta would probably be, what would Delta be if this was at 1675? Yeah, so Delta would be like 0.03 times 100. So it would be down another $30. Yeah, instead of $6, it'd probably be $3. It'd be cut in half. So I got a decision to make. Do I want to sell this covered call that's near at the money, collect $4,900? And then if I do, what do I do with the money? Do I just keep it in cash because I only have 39,000 in buying power? And before the market shit the bed, I had like 80,000 in buying power? Or do I go out to 199 days, buy the cheapest call that I can for a little bit, an extra grand more than what I'm selling for? I could increase my long delta by 0.16. Now, no guarantee that MicroStrategy won't shit the bed again and go to 1200 or 1000 or 800. And if I have to be honest here, I do year to date. I mean, 700 is where the real support is. That's when MicroStrategy went nuts. So there's a shit ton of support for MicroStrategy at 700. There's decent support at 1000. And again, I don't do a lot of technical analysis, but I think I can draw some support and resistance lines. But we've got support at 1000 here. We've got support at 1000 here. Got some support at 1300. But the more lines you can draw at a particular price, the better. And as we can see here, what was in the last week? So didn't it drop to 1000 at one point? Anyway, so we've got another basically 1K support line here. It's better on Tasty Trade. Actual real chart. Yeah, so this went down to 1000. Yeah, and look here. So this chart is much better, but there's a ton of support here for 700. You got this little hitch right here. It went up to 1300, bounced off 1000, it bounced off 1000, bounced off 1000. So there's a ton of support here. Now the bad news is if this breaks support, we're looking at 700. There's no other support level to catch this fall. I mean, hell, we could be looking at 5. 700 would be heartbreaking, but 500, it's not like if we get a snap like this, that dropped from 1800 to 1000. There's no reason why, if this cracks, if the bottom drops out of the market, there's no reason why this can't crack to 500 and then snap back to 7 or something stupid. If that happened, I would be absolutely desperate. I'd probably be selling off everything in this account, transferring over to this account. Probably have to go and borrow some money off the house to make that work, or crack open some cold storage Bitcoin. Who knows what kind of desperate lengths I might have to take. But let's just take a look here. So if I want to sell a covered call, let's do 1400. 1400 might be a nice little ceiling here. 4,900. And then I can buy the 200-day long call with that. Yeah. Let's give it a shot. depending on if this fills, I may have to walk this down. Yeah, I should have just placed that trade immediately when the price was $13.95. Okay, gotta fill. All right, so now I can go to the 199 strike. I don't know what that's about. Okay. Buy a call. Probably gonna have to walk this up. 5, 4, 3, 2, 1. Let's try to pay 63, 64. Okay. So I spent a little bit more than I collected. I got paid 48 and spent 64. Didn't use up a ton of buying power. So that's I'm happy with that. So we'll see. Maybe I've tempted MicroStrategy to rocket up to 1700 and just destroy my covered call. That would be nice. You can see the covered call that I sold yesterday at the 1480, because the price of MicroStrategy has gone up. The price of my call that I sold has actually stayed basically the same. So that'll be nice. If that continues throughout the rest of the week, that means MicroStrategy is holding firm or going up. The split is next Friday, so looking forward to that. But just wanted, I was thinking about placing this trade, so I thought I would go ahead and start recording the video just so that it can be on tape. Didn't want to miss that opportunity. So that is done. I think that's going to be it for now. That's the name of my game. Selling volatility week to week, reinvesting all of the profits to go long. I'm selling short dated options that have high theta, and I'm collecting all of that premium from Friday to Friday. And then I am buying theta that is as far out as I can afford it. This one that I purchased was out to 200 days. You can see that I also have the farthest one that I've been able to afford is the 500 day. However, when we have the split, I'll be looking forward to potentially buying some of these January 16th. I plan to unload all of my long leverage by, I don't know, maybe October 2025. And October, November, December, January. So that would be perfect because I like to unload my long calls about 90 days prior to expiration. So these January 16th ones would be perfect for me. But right now they're kind of cost prohibitive. They are 25 grand a pop. They will only be 2,500 a pop after the split. So I will probably be loading up on these. Every time I sell premium, I will probably be buying these bad boys. Theta is even lower out here, but I don't know if it's that much more advantageous. Let's see, what's the delta? 0.44. Delta's 0.38 here. Yeah. So I don't I don't necessarily know if there's an advantage, a significant advantage to these June 18th ones. Delta was a little higher, right? And theta will probably be a little lower, so they won't decay in value as fast. But it also might work out. This January 16th, 2025 one, or 2026 one, if I do decide that I want to exercise these, for example, MicroStrategy's at, I don't know, 5K, 10K, something crazy, I would have a decision to make because there's not going to be a lot of extrinsic value left in relation to these these options. So holding them for the last 3 months wouldn't necessarily be the worst thing in the world. And depending on how many of these options I can accumulate by then, I may be able to, you know, sell two to exercise one or sell three to exercise one. Some kind of ratio would make sense. But I also don't know how many shares I actually want to hold. I will definitely be paying off all debt. End of 2025, my plan is to pay off all my debt. I borrowed like 100 grand to buy more MicroStrategy with, and then I bought MicroStrategy on margin. So I got leverage on top of leverage, and we will see what Bitcoin and MicroStrategy shake out to be somewhere between mid and end of 2025. And I will have some decisions to make about whether I want to exercise any of these calls. That would actually set my cost basis at that moment. And if I want to hold them for a year in order to pay short-term capital gains tax, that would be when my counter would tick down. And if Bitcoin's entering the next bear market in 2026, I don't know that I want to be holding nearly as much MicroStrategy as I hold now. If I am anticipating a bear market, I could just get extremely aggressive with the covered calls instead of trying to allow for like 20% call away value, um, like I normally do. So in this one, the price of MicroStrategy was around 1,300, I believe. So I had 1,380. Actually, it might have been the 1,200s. It was in the 1,200s. I built like 15, 20% call away value into this covered call option. Now this one I sold at the money. So I'm doing a little bit of a different strategy with one of these than the other. But for this one, I didn't reinvest any of this. Well, maybe I did, but anyway. Um, in this one, I took all of the profits and went even longer. But in 2026, if I'm still selling covered calls in MicroStrategy, if I own MicroStrategy at all, I'll definitely be selling covered calls. But I won't be doing any of this 20% call away value. I would probably do max 10% or even just like 5%, like damn near at the money. And of course, I can change my strikes based on whether the price is down or up or whatnot. I don't have to be locked into an exact number. Like I always go with this delta and I always go with this 10% call away or 20% call away. I can totally be flexible and react to the market when I'm choosing my strikes. So, all right, that's it for now. And be good, y'all.